Wall Street is trading sluggishly today with a low volatility. Stock markets are in equilibrium now following thin trading on a Monday. The benchmark stock indexes are trading with a slight bullish bias. Such a market environment is a lull before the storm. The inflation data will set the market in motion tomorrow, so traders are braced for a turbulent session. Another market catalyst will be the Fed's minutes of the last policy meeting. Bitcoin is displaying interesting performance. The token has broken upwards a 3-week consolidating range. It seems that the flagship crypto has begun a new rally, and Bitcoin has outpaced Donald Trump in its search engines. Futures on the US stocks are trading steadily today. The Dow Jones and the S&P 500 rose by 0.3% and 0.1% on Monday. The Nasdaq closed with a 0.03% downtick. The US nonfarm payrolls released on Friday cemented expectations of another rate hike in May. On the other hand, robust employment dispelled recession fears. And now the market is anticipating the US CPI for March. Later in the week, top American banks are due to report their financial performance for the first quarter. Investors hope to find some clues to current economic conditions and Fed's policy moves. American traders are speculating in the quiet market for the second day in a row. The stock indexes are making minor fluctuations. Wall Street closed at the same level as it did last Thursday. Following a rapid rally in the second half of March, all risky assets are losing bullish momentum. Perhaps investors are regaining the risk of mood in light of the bank crisis, which wrecked the rally. Market participants are trying to puzzle out further prospects. Tomorrow, the market will absorb the US inflation data. The annual CPI is expected to slow down its growth to 5.2% from 6% a month ago. So, inflation could have eased to the rates of the autumn of 2021. Under this scenario, the Federal Reserve will have arguments to put the funds rate on a hold at 5%. The stock market will cheer this agenda, which in turn will be bearish for the US dollar. The technical picture for the stock market remains the same. The VIX index indicates tranquility among investors. The S&P 500 is going up in line with the expectations. The buyers are defending support at 4,100 points, willing to push the price higher, and the upward target is still seen at 4,200 points. The index is able to pass this landmark level unless inflation meets the consensus. The crucial level is 4,000. A breakout downward could drag the price to one-year lows. However, it's not the baseline scenario. The US dollar index settled at 103 points yesterday in response to the non-farm payrolls. However, it slipped today, having lost most of its gains. According to Fed Funds Watch tool, the likelihood of a rate hike by 25 basis points is measured at more than 70%. Fewer investors now expect a rate cut. Market sentiment and environment could change before the Fed's policy meeting, and the inflation data will be of a major importance for the Fed's rhetoric. The outlook for the US dollar suggests a further decline as the US Fed is likely to soften its rhetoric. The US dollar index could fall lower once the level of 102 points is broken. Investors shared their optimistic view on the US economy in anticipation of a season of corporate reports. At the same time, the bond market signals recession risks. A few Fed policymakers are due to speak tonight. All of them downplay the gravity of the recent bank crisis. They still give priority to the crusade against inflation. Can the new hawkish remarks revive the greenback's luster? It's hardly possible. Even with the most hawkish agenda, the US Fed looks softer than other central banks. For example, the ECB and the Bank of England. No wonder both the euro and the pound sterling have been the best performing currencies this year. The US dollar looks stronger than the yen and the Australian dollar because these regulators have been more cautious during the global cycle of monetary tightening. The USD cut pay is also trading with a slight upward dynamic on the back of the empty economic calendar. The instrument's moves are caused entirely by the technical factors. The currency pair is trading at about 1.3500 at the time of recording this video, having inched up by 0.13%. The energy market is making no impact on the loonie. A muted dynamic of oil prices despite pending oil output cuts by OPEC countries did not benefit from the commodity-reliant loonie. Now, traders refrain from a large bets ahead of the Bank of Canada's meeting scheduled for Wednesday. The USD cut pair will clear up its direction after the policy update. Bitcoin jumped above 29,300 on a Monday and printed new highs in 10 minutes. Today, the price tested the landmark level of 30,000. The flagship crypto has rallied by more than 80% since the beginning of the year, amid growing expectations that major central banks will complete their cycles on rate hikes. Market participants hope for a slowdown in inflation and have spotted signs of a softer hiring in the US labor market. Investors reckon that the US Fed will announce a final rate hike in May and 3 rate cuts of the same size by the year end. The rally in the crypto market was propped up by dovish expectations, and the rally carried on a mid-March after a series of bank failures in the US and Europe. Such events boosted demand for non-cash assets. Crypto analysts predict the start of a new rally. Bitcoin is expected to conquer new historic peaks. The token has already completed its 4th wave and is developing the 5th one. What to expect? The price could either surge or tumble, and the actual development will depend on the character of a recession. A severe recession could play havoc with the crypto market, and a milder recession could push crypto assets up. And that's all for today. We wish you good luck in your trading and waiting for you on our channel tomorrow. See you!